Hello, everybody. Welcome to the Wednesday live stream. The more things change, the more they stay the same. And I have to tell you, this being coming into my fourth cycle, things are just repeating over and over again. So before we get into it, today I want to kind of just take a step back. So I know that usually on the channel we're a little bit more negative because we want to deal with the reality of the situation and kind of prepare everybody for what this year is going to be. Sucky. And it's going to be kind of difficult, and the price is going to drop and fluctuate and be all over the place. And this is tough times, I must admit. Now, people will say, oh, it's easy. All you got to do is just accumulate and no big deal and stuff like that. Look, it never gets any easier. Again, this is my fourth time going through this. And when you go through the cycles and the bearishness and the bullishness, you just pretty much get used to it. But there's some things that we can learn of from the past as things are coming again in the present and in the future. So this is a great website I'd like to take a look at. It's 99bitcoins.com, Bitcoin obituaries. And I like to see this just to remind myself, because as we get further along in this bear market, it's like we think, oh, this is it. I just screwed up and everything's gonna go on the tubes. And trust me, even I think that sometimes. I know, people, that's crazy, right? Somebody on YouTube saying that sometimes they have doubts. Guess what? It's real. So I'm sure there's other people out there that have no doubts and they're 100% into it. But if you don't have any doubts about what you're doing, it kind of have to question some things about you. And maybe you want to take a look behind the curtain and just kind of look and say, like, is this the real deal? Well, here we go. So when I got in, I actually got in November of 2017. Bitcoin's at 8,500. But I like this website because it pretty much tells us like what was going on at the time and the people that said it and the price at which they said it at. So I'm just going to go through this from October. I'm not going to go through all these because it's expansive. But this one's pretty good. UCLA faculty voice, Bitcoin is an energy wasting Ponzi scheme. That was in October 24th when Bitcoin was $5,912. I'm going to skip the LinkedIn one. I don't know who it's from. This one's pretty good from CNBC. Prince Alwaleed says Bitcoin will implode and run in the making. That was when Bitcoin was at 5,900. Technology will kill Bitcoin. And we're going to take a look at why technology is going to lift us up, especially AI in a second. That's from Forbes 5,600. Steve Bernanke thinks Bitcoin will fail, but he likes blockchain when Bitcoin is at 5,600. Nobel-winning economist Schiller calls Bitcoin a fad. Now, I remember reading all these things and going, man, there's some very smart people. And I think this is stupid what I'm investing in. Am I doing the right thing? I mean, Nobel-winning economist, I mean, he would know, I suppose, but he's wrong. And this was in Bitcoin was $5,600. And then, of course, the jewel and the crown, Peter Schiff. Bitcoin is not the money of the future. And that was when it was 56.88. Now, as far as like Bitcoin not the money of the future, he had a point back then, because these days, I don't think a lot of people are using Bitcoin as money yet. I do see why they're going to use it in the future, but on this point, he was correct. Bitcoin is not the money of the future. It's a heck of a store of value, though. Jamie Dimon says if you're stupid enough to buy Bitcoin, you'll pay the price one day. That was on CNBC. Bitcoin was $5,100. Gary Schaling, The Guardian, isn't he good here? 7 reasons why you should not invest in Bitcoin and crypto. That's the Economic Times when Bitcoin was 4,400, and on we go. And you get to see that that breaks us down by month and by year, and it gets pretty heated in the bear market years. In 2018 alone, there is massive amounts of them. Everybody is saying like, "Hey, this is a Ponzi. Hey, this is worthless. This is never going to make it. This is not happening." That's when Bitcoin was, like, again, $4,300, $3,700, $39,000. We would step over our own moms just to get to those prices these days. I'm just kidding. I won't step over mine. But you get the point here. And that's why I like to take a look back and just look at all the times that Bitcoin was called dead. 2022 was also a favorite time of mine. And it just wasn't the case. And here we are coming down to 2026. So we have those things. So my question is, like, okay, that's great to take a look at, but who's buying? What's really happening behind the scenes? I mean, what's really helping or holding us up? Well, first of all, I do like this website, Bitcoin Magazine Pro. And what it's showing us is Bitcoin addresses with balance of more than 10 Bitcoin. And you can see that's quite substantially, I'm kind of surprised actually, that from 2023 to roughly, we had 156,000 with more than 10. And as of today, we've got 150,000. So not really much accumulation there. Actually, it's a reversal. People with more than 10 Bitcoin, not as many have it. But then this one's interesting. Addresses with balances greater than 100. And what do you notice here? These, I think, are the new whales. Because back in the day, when you could have, like, I'm going to skip all the way to the end, 10,000 Bitcoin. Back in the day, you could accumulate 10,000 Bitcoin, and it wasn't like that huge of a thing because 10,000 Bitcoin weren't worth that much. But as time has gone on, you see how there's a little bit of a reduction. But as the price of Bitcoin goes up, we're going to see, like, for more than 100 Bitcoin, I think these are the new whales. And what do you notice on this one? Since 2024, we have seen nothing but more and more people accumulating that 100 Bitcoin or so. Now, it's taken a little bit of a drop since January. I think we topped out in, let me blow this up. I'm curious. Oh, we haven't, wow. I guess we have topped. 19,700, yeah, that's the point. Actually, no, sorry, 19,094 on January 7th, 2026. These, I think, are the new whales, and these are the ones that are accumulating in the background as everybody is freaking out. That's with 100 Bitcoin. And then, of course, we can go to 1,000 Bitcoin. It's been pretty flat for quite some time. And, of course, we took a look at the 10,000 Bitcoins. We skipped ahead. But, again, I think that these 100 Bitcoin are the new whales, and we'll see how it goes. On top of that, to strengthen the argument, this is from Prime XBT, Bitcoin massively oversold as whales are buying. On-chain data shows that whale wallets have just completed their largest weekly accumulation since November, scooping up 53,000 Bitcoin worth more than 3.6 billion. At the same time, Bitcoin's weekly relative strength index, RSI, has plunged to levels only seen twice before in the asset's history in 2015 and 2022. So again, if you remember those years, those were the years when everything was collapsing. It was awful. All you got to do is go over to 99 Bitcoins and take a look at 2015 and 2022, and you'll see just how Bitcoin was going to die back then. And of course, it did not. So we have these things going on. People are buying, whales are buying, but there's some catalysts that we have to look for. And one of these catalysts is the Clarity Act coming through. This right here is the CFTC chair, Seelig, pretty young guy. And just listen to what he says here on Fox Business as far as like the Clarity Act is concerned. Take a listen.
Well, thanks to the president's leadership, we are on the cusp of getting clarity enacted into law. The regulation by enforcement's over, the Genius Act signed into law, and we've really turned a new page. And I would say the United States today is the crypto capital of the world. But we need to make sure that it stays that way. And this Clarity Act is really critical. The president has been clear that we need to get something enacted into law because we want to future-proof our statutory framework for crypto. We can't allow for Gary Gensler 2.0 to come in and tear it all up. And so this legislation is critical. It's all hands on deck, and we're making a push to get it done. There are some little wrinkles around the point you mentioned on the yield front, which we thought some of this was settled with the Genius Act, but it's coming back to the bear. But we're going to get this thing across the line, and we're going to make sure the United States is and remains the crypto capital of the world.
Well, let's hope so. So we'll see if that comes through. But Clarity Act, I think, could really help boost us up, just to give us a little bit of, as the word recommends, clarity into what can be done, what can't be done, who oversees what. And of course, I would wish they just get past the sticking point of just the yield for stable coins. But they want to make that the hill they're going to die on. So we'll see if it all works out. And then lastly, I know we talk a lot about Bitcoin ETFs and Ethereum ETFs, stuff like that. But as a reminder, even though we've had some pretty major outflows, which we talk about these are quite some big outflows. Just remember that we started in 2024 for the ETFs, We topped out around October 2025. Yes, that was the all-time high. But as far as like institutions and even retail dropping off, retail is a big part of the ETFs. We can see that we're still pretty high up in the amount, and the same thing can be said for Ethereum. So don't get too caught up. And I know I am guilty of this. Is I talk about, wow, major outflows here, major outflows there. But as we can see, as time goes on, we still have a massive amount in the hands of these ETFs. And lastly, before we get into something, AI. And me and Jerry were talking about this on Sunday, about AI and what it means for Bitcoin. And there were some things I just did not know until today. I was just perusing, just making the query as to, how can AI benefit Bitcoin or crypto in general? Because I'm personally right now trying to use OpenClaw with my little mini Mac to get things done. And I'll be honest with you, it works sometimes and sometimes it doesn't. AI has got a real big problem with delusions and trying to make different assumptions, and it's just not perfect. What I wanted to see was, like, since that's the new hot thing and everybody wants to invest into that, how does this overlap with crypto? And what's interesting enough about this one is that when I did the research, there is these two things called X402 and L402. I don't know if you've ever heard about these things. I did a post on it. Didn't get much traction. I don't think people really care about AI, but I can see how this could actually be a big thing. So to break this down, X402 protocol, it embeds payments directly into internet requests. So for example, an AI agent researching market data can pay a fraction of a penny per query to a data provider, like for API integration. Why is that such a big thing? It's because if you're trying to use anything like credit cards or debit cards or things like that, there's a transaction fee. Usually it's roughly around 30 cents or 2.9% plus a transaction fee of like 30 cents. So that means everything you do is 30 cents. But here you can do fractions of a penny and you can do it all on chain. And I thought to myself, well, this is a pretty great idea. Is why maybe to take a look at Coinbase as far as a stop, because if they're going to be at the forefront of that, and I got to tell you, just do any kind of Google search for AI agents and OpenClaw, and you'll see a ton of things that are going on. And you'll see a lot of businesses, I think, are going to go out of business because of that. And at the core of it, not the core, I think one of the leading parts of it is payments between different things to get access to the data and the compute that you actually need without nickel and diming yourself to death with fees. So with this one, this X402 protocol, this could be a big thing. And then on top of that, as far as like other payments, because we can't just use Coinbase and Base, there's not even much to it. But this was interesting. There's a thing called L402 protocol for Lightning Labs. It's the Bitcoin native version, and you get to use the Lightning Network. AI agents can send microsats to pay for GPU compute or different tokens. And if you've used anything with AI, you know tokens are the mainstay of everything. Crypto credentials act as both a receipt and a temporary API key. And then this is Jack Dorsey. And I always remember what he said about Bitcoin, where he said, look, if we're going to use it as a store of value, it's a failure. It's not a store of value. This should be a medium of exchange. And I think this is why I think he's pushing this different protocol for Lightning to make it into the AI part. So if we're looking at like, well, how can I pay for things? Well, it'd be pretty interesting to use Bitcoin for that. Anywhere, anytime. You don't have to use any kind of stable coins, and it just can be Bitcoin, or you can just use whatever you want to use. I think that'd be pretty big. So we have those two things. And then also, something I never would have thought about was ERC 8004, which is Know Your Agent. And I didn't have this actually an actual thing, but it's being built on Ethereum. And between this is if we're going to be able to transact for these different API integrations and things like that, that's great, but who's paying for what? All banking software wants to know is who's KYC and AML'd. And if we think about it, and we think about these AI agents, we're going to need stuff like this to actually say, well, who's paying for all this? Who's going? I know people would say, well, it's anonymous. We shouldn't have to do all that stuff. But I think we both know, or we all know, where things are going. And coincidentally, Ethereum is building this instead of KYC, KYA. I think it's pretty good. So finally, I will just say that for this to come into fruition, that will be another use case. And I think we should actually embrace AI and using payments, whether that be stablecoins or Bitcoin or what else that we could possibly use, and we can all make it kind of run together. And then lastly, before we get to a Q&A, I will just say this. I know people will say that, well, the crypto market it's just manipulated and there's these big players moving things around. It's from bull theory. I didn't know if you guys know this, but equities just saw a big swing. And you had S&P 500 first dumped up 1%, which for them is huge, wiping out $600 billion, then pumped 1%, adding $650 billion. NASDAQ, same thing. Dow, same thing. What does this mean? It means that once you go down that far, you start to wipe out the longs and you wipe out the shorts. So all the different exchanges actually make a boatload of money. And I know people say, well, that's just the way of the traditional markets. Is it? I think it's all a game, and I think it's all manipulation. I think the only way that you can really get ahead is essentially just dollar cost averaging, holding it, and sell when you need it. And when things get overheated, you take those profits, and that's it for today. So look, if you like today's video, give it a thumbs up, consider subscribing. We talk about is time sensitive. Now let's go into a little Q&A. I'll answer all your questions, and we'll go from there. What do you guys have today? Rusty says, scam alert, fake letters in the mail from Trezor. Authorization check will soon become a mandatory part of Trezor. Just throw it in the garbage. Don't scan the QR. So yeah, I saw this. This was, I guess now it's Trezor. Before it was Ledger. I think that was one of the first ones. So Trezor, it'll look like, you know, it's from an official individual from the cold storage company, Trezor. And they'll say like, just what Rusty is saying here. It's like, hey, you need to scan this because we need to qualify you or do whatever else. And of course, all the QR code will do is somehow wipe you out, get your private keys. I don't know how it does it, but you don't want to scan it. You don't want to do anything. When in doubt, go to the source. And of course, like we talk about the rules, second rule is everything's a scam until proven otherwise. So don't scam or scan anything. Let's see. I prefer KFC. Sure enough. And crypto is the oil for AI payments. We'll see. It's all, we'll see what actually comes on the pipe. Hey, Rob, how close we historically in regard to the money market, the late 20s crash? That's going back pretty far. Historically speaking, well, I mean, 1920, 106 years away or somewhere around there. So, yeah, quite a bit. I don't, and you know, some people say crash is coming. I've been hearing about a big crash since I got into crypto because I was never in, I was never a stock person. I was more of a build my own small business and invest into real estate and land properties. But when we take a look at just what's going on, I mean, recently, this is the thing that I look at mostly, which is the midterm election years. And we just see that here, the midterm election year, these are the worst years for the markets. And we're in that year, 2026. But one thing to note is that the midterm year is quite possibly the worst year for any kind of gains in traditional market and, of course, in crypto. But the year after, it's pretty great. And I will say, this is what opened my eyes. There was a post from Seth CL. 100% of the time, you'll make it. Since 1942, buying the S&P 500 on midterm election day, generated a median return of plus 15% through June 30th of the following year, 7 months. Never, not once or ever, was there a negative return in the forward 7-month period. World War II, Vietnam War, 1970s, lost decade, dot-com bubble, great financial crisis, all macro periods included. And what do you notice about these dates, these midterm dates? 2022, Wouldn't that have been a pretty good time on the midterm day, November 8th, 2022? When was the all-time bottom for crypto in last cycle? Oh, that's right. It was November. I think it was November 8th, quite honestly, 2022. How about November 6th, 2018? That wasn't the absolute bottom. I believe it was December 7th, 8th, or 9th. But imagine if you would have bought Bitcoin in 2018 at $5 grand, not too bad. And then 2014, it wasn't the all-time bottom in 2015, but not too bad. And guess what's coming up? Well, it's mid-February. We're in 2026. If things have repeated, like I think they usually repeat, you're going to see somewhere around, I don't know, end of 2026 as the all-time low. And some people will say, well, maybe it's October, maybe it's November, maybe it's December. Maybe, I don't know. That's why I just dollar cost average and wait around. Usually it works out. So something to think about. All right, where are we? Plato says, I think there's a question that needs to be asked. At what part of your life do you stop investing in Bitcoin because you can no longer afford the volatile swings? Plato, I think the bigger question is, if you're investing in Bitcoin and you're worried about the volatile swings because it affects you that great, should you be investing in Bitcoin whatsoever at all? And then some people say, well, yes, because there is a huge problem with the dollar and inflation and the declining purchasing power of the US dollar every year. It's true. However, the purchasing power of the dollar has gone down, but how much has Bitcoin gone down in these massively bearish years? More than the dollar. I know people say, well, I don't care because I'm just going to keep going into Bitcoin. That's fine too, but at some point, if you're one of those people who like, it stresses you out when everything starts to collapse, it stresses you out when you have these huge wild swings, then this can be played or not played. This can be everybody. But if that's the case, I think you have to take a hard look at yourself and go, did I go in too much? Because I don't know if you guys have noticed, this is pretty much my attitude when we're in the bull market or the bear market. This is pretty much how I am. And it's not because I timed everything so greatly. It's just because I'm more conservative. That's it. So you have to really think about that. Right. Irrational. That's true. The swings are a feature, not a bug. And if you want to get into like, massive 7, 8, 9, 12% per year, hey, there's the S&P 500, nothing wrong with that, right? I don't know how well you're keeping up with inflation with that. If you overlay the M2 money supply with the S&P 500, kind of just, I'll show you actually. I think we talked about this many times. Let's see. All right. Ooh, Ben's got the M2 Money Supply International. Very nice. Yeah. So as we can see, the overlay is the S&P 500. So this is the M2 Money Supply. It's a measure of the money that is equal to M1 plus deposits, money market, securities, time deposits, CDs, blah, 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 all that stuff. And as the printer goes burr, you're going to see that, is the S&P 500 really going up, or is it just because we keep printing a bunch of money? And that's pretty much it. Look at this time. This was a great time. We had this like little drop off, coronavirus. Then we started printing like crazy. Everyone's like, oh, I'll just run in the markets. And then we go here, and then we peak out of the money supply, and then we start to retract, and everybody loses their mind because it's not a free game anymore. And the S&P 500 goes down. And then we start printing again. Everyone's like, oh, it's cool, let's do this. That's pretty much it. It's all liquidity, which is a funny thing because you would think we have plenty of liquidity, but yet Bitcoin is where it's at. But you take a look at like gold and silver markets, the Dow, everything's up. Pest says, are we still holding the ALT? What do you think about it? Parabolic, what's the ALT? I don't know what that is. It's been a long day, so you have to say what is, like, you're talking about just, let's see. If I'm looking at ALT, it's the alt layer. And I've never held that before, so I have no idea what's going on with that. Everybody hates the dollar, but right now it feels like everything is bleeding against it, despite DXY weakness. It's quite interesting, actually. And usually when the dollar starts to weaken, Bitcoin rallies, but not so much now. And Sequoia's got a good point. Well, the buck is screwed. Metals trading like meme coins. Tech and AI stocks are flailing. Is there any real safe haven? I mean, silver is pretty volatile, which is weird, but there's nothing wrong with gold. I think it's all pretty well. And as long as these Federal Reserves or reserve banks keep buying up gold, especially the People's Bank of China, PBOC, I would do pretty well. I'm not going to be buying a bunch of gold. I'll probably be buying Bitcoin every single week. How about runes? I still do have a couple of runes. I don't know what they're worth. Probably nothing. Gen X says, the best thing I ever did was sell 500 ADA in January for $1.12. What an underperformer, right? Remember when Cardano was like pennies and then they went to $3? That was in 2021. And this one, it barely broke $1. Sad. Just sad. And I think that's it. That is it, everybody. So that's it for this one, everybody. Hope you can stick with me for this these tough times. Again, and Plato had a good question. You know, if this is too much for you, maybe just take a break and just get out for a bit. Ivan on Tech has a pretty good one where he says just do a jailbreak, which is just sell your alts at a loss and get the hell out and maybe get into something a little bit safer. It's up to you. But that's it for today. So look, like today's video, thumbs up, subscribe, all that great stuff. I'll see you guys in the next one. Have a great rest of your day. Adios.